Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. India's industrial output grew 1.8% in November after 3 consecutive months of contraction. CPI inflation for December numbers are out today. The centre may seek an interim dividend from the Reserve Bank of India over and above the 1.76 lakh crore record payout in the current financial year, according to what sources tell BloombergQuint. Infosys internal audit finds no merit in the allegation against CEO Salil Parekh. The tech major raises its FY20 revenue growth guidance to 10 to 10.5% from the earlier 9 to 10%. And Edelweiss Group denies having any business relationship with Capstone Forex and debunks allegations over its involvement in foreign exchange violations, but confirms that the Enforcement Directorate has sought information regarding the same. And in international news, Iran admits to shooting down the Boeing 737 jetliner bound for Ukraine. The administration says it mistook the plane for a cruise missile. Well, let's take a look at the trade setup for today. The world markets, at least the US markets, ended with a bit of a whimper, no doubt in part pulled down by the lackluster jobs data, which was, well, not lackluster, but below estimates, let's put it that way. And the markets were disappointed with that. Actually, at these levels, the markets want everything to be perfect because otherwise there's no cause for concern on the US jobs or the employment. Frankly, there's a chart on the Bloomberg terminal which shows how the US unemployment is at 50-year lows. So the numbers are not all that bad, but because they were below estimates, the US markets came off in Friday's session. Now, is that having its repercussions on the rest of the Asian market? You would have to say it's a mixed bag. Japan, remember, is shut today. Shanghai is down about 1/3%. Hang Seng is up marginally in trade. Australian market started off slightly lackluster too, and the SGX Nifty indicates a start which is marginally in the green. So you might actually have a start which is slightly positive. Let's wait and watch if that continues. And no doubt, in part, there would be cautious optimism in the markets, despite the fact that we had flat returns for last week, simply because I think the crude price movement and will keep the markets buoyant. To my mind, I think what will take center stage now is all activity around pre-budget conversations, and therefore sectors that could benefit as a result of what markets would like to believe will come in the budget, as well as result reactions will start. We'll see evidence of that in today's session as well, with Infosys and Avenue Supermarts, etc., etc. But a lot of broader end of the spectrum stocks will now start dominating trade because of the kind of results that have come out on them. So you've got to watch out for that. Flows were not bad, 578 crores from the FI side that came in on Friday's session as well. So on that front, there is almost no news. I think we'll be watching out for 2 key news bits early part of this week. From an international front, I think any kind of trade deal signing or tariff deal signing between US and China. And remember, 15th is the line which the US has, that Donald Trump has set at the start of the new year as well. The Chinese delegation visits Washington today. Today and tomorrow are the meets, and let's wait and watch. Today, rather 14th and 15th are the meets, and I think any kind of resolution or positive vibes around that might actually help the market. So do watch out for that. And back home, as our headline stated, the CPI numbers coming out to be later to be released today would be important. It's the last set of CPI inflation data that comes in before the budget and the credit policy. So very important set of numbers to watch out for as well. Let's see if there is some uptick or no. And of course, from a markets perspective, we'll also watch out for a couple of results that are going to come out today. Delta Corp as well as Tata Elxsi. Delta Corp has been on a bit of a roll the last 3 days. Let's wait and watch if the results also live up to the billing. And Tata Elxsi could be an interesting one as well, simply because it's not had a really bad time compared to some of the other tech majors too. So let's wait and watch for these. But there'll be a set of stocks that will react at 9:15 a.m. today, and I think you should take stock of that. I think Infosys is a no-brainer, though I'm speaking about it and Agam will speak about it, but almost everybody would know that this is a stock that should be in focus. Just for the uninitiated, results were in line with estimates. However, the management has raised the full-year guidance, which is an important thing, so which is why the FY20 growth guidance raise is arguably the top headline. But the other big thing is that the audit committee has found no evidence of financial impropriety, and I think that is also or executive misconduct, and that is also an important piece of news. Analysts believe that the valuation gap of Infosys with TCS could actually narrow. There is a substantial gap, about 28% currently, that narrowing down itself could lead to stock reacting well. But I'll not dwell too much on it because Agam will. But keep in mind, Infosys will be a big stock to monitor, as would be Avenue Supermarts. The results were largely in line with estimates, but good numbers. Revenues up 24%, profit up 53%, aided, of course, by lower tax. But this is the second quarter in a row now that they've given profits northwards of 45%. EBITDA was up about 32% as well. And the management, quite unlike quarter two, wherein the numbers were slightly below what the management had anticipated. This time around, the management has noted that the numbers or the top line growth is in line with the internal expectations of the company, and that's why it is important, the fact that the numbers have come in line with the internal expectations. So that's an important line. Keep in mind, Avenue Supermarts could be an interesting stock to monitor in the session today. Yes Bank, the board has rejected Arvind Singh Drake's $1.2 billion offer, and amongst other notable piece of news, they have decided to raise funds up to 10,000 crores via various options. There's a lot of talk about what some of these options could be. The kite flying has already started. Wait and watch what Yes Bank does. Last couple of names, Edelweiss, they have said that they received communication from the ED for dealings with Capstone, but they deny that none of the companies have any transaction with Capstone Forex. I suspect that the stock would remain under watch today, so do watch out. And last but not the least, HCC lenders have initiated a debt and asset carve out of about 2,100 crores to a third-party control SPV. Let's see if HCC, it's a tiny tune, but may react. However, let's tell you what's lined up on First Word today, a collection of the top editorial stories. Yes, IIP numbers that came out are important, and Pallavi Johnson to tell us what helped the IIP Index grow in the month of November. And then Nikunj Jodi explains why the government may seek another interim dividend from the RBI. Then we go to the big one, Infosys. Agam takes us through the findings of the internal audit committee, which gave its key personnel a clean chit and its third quarter earnings. Sajid sums up the portfolio manager's performance in the month of December, and Darshan talks about the domestic pharma sales for the month of December. India's factory output registered a marginal uptick in November. That's a first in 4 months though, and which is why it's important, and it's also in keeping with some of the other macro indicators that are hinting at some signs of recovery. Pallavi Nahata has this report.
India's industrial output rebounded in November after 3 consistent months of contraction. Along with other high-frequency indicators, these figures suggest some stability in the economy, even though signs of a recovery remain modest. IIP rose 1.8% in November on an annual basis, compared to a contraction of 3.8% in October. This was according to a release by the Statistics Ministry on Friday. The rebound in November is largely led by a low base effect. IIP had grown by just 0.2% in November 2018. It was still higher than the Bloomberg poll of 32 economists, which expected IIP growth in November 2019 at 0.3%. A breakup of the index shows that 13 out of the 23 manufacturing industry groups saw growth in November. That compares with just 5 of them growing in October. Overall, an improvement in the manufacturing segment, which makes up over 3/4 of the index, has led to the higher figures. Manufacturing output grew at 2.7% in November, compared to a contraction of 2.1% in October. Mining also showed an uptick, while electricity generation continued to contract, but at a deaccelerating pace. Manufacturing of motor vehicles, food products, tobacco, computers, and machinery and equipment were some of the categories that continued to contract in November. Industrial output, when broken up by the end use of goods, showed contraction across most major categories except intermediate goods and consumer non-durables. Overall, economists remain cautious over what the rebound in IIP could mean. Aditi Nair, principal economist at ICRA, thinks that the index is likely to contract in December once again.
Well, that's an important statistic that has come out, and let's see if some other macro indicators also turn around. Boy, we need that. The government, though, may turn to the Reserve Bank of India yet again as it grapples to meet the fiscal deficit target. Sources have told BloombergQuint that the government may seek another interim dividend from the central bank. Nikunj Jodi joins us now for more on this.
The government may yet again seek an interim dividend from the RBI as it struggles to meet its fiscal deficit target amid a shortfall in tax revenues. This dividend would be over and above the 1.76 lakh crore rupees record payout by the RBI to the government in this financial year based on the recommendations of the Vimal Jalan panel. Remember, this amount included a dividend that the RBI from the RBI's income in the previous financial year, the July-June financial year that the RBI follows, and also about a little over 52,000 crore rupees that the RBI had to transfer the surplus capital that the RBI held in its balance sheet according to the Bimal Jalan panel committee's recommendation. Remember, the panel had also suggested that the practice of transferring an interim dividend needs to stop, and an interim dividend to the government can only be given under exceptional circumstances. Now, the government is of the view that the GDP is expected to grow at the slowest pace since 11 years in this financial year, and this year itself is an exceptional year, and the government can seek an interim dividend from the RBI. This interim dividend would be from the July-June 2020 financial year that the RBI follows, and a decision to transfer this interim dividend would be taken up in the central board meeting of the RBI, which is a customary board meeting scheduled after the presentation of union budget. So this meeting would happen after the budget is presented, and will take a call whether the interim dividend will be transferred to the RBI in this financial year. Over to you.
Yeah, well, this is the other important development that every macro watcher would be watching out for. But let's wait and watch as it happens. Now, to the here and now. The big news that came out post-market hours on Friday, Infosys. Two pieces of news. One, it's given its key management personnel a clean chit. The tech giant, which was conducting an inquiry into whistleblower allegations of impropriety, says it found no evidence to back the complaints. Agam Vakil is here with these details. Agam, no doubt a big overhang over Infosys goes away.
Yeah, well, the problem is not completely over because investigations with respect to the SEC are still on. But as far as, well, the Indian component in, all the, well, investigations taken up by the audit committee are concerned, well, it does put to rest a lot of concerns with respect to, well, the allegations which were put forward by the whistleblowers back in October 2019. So in terms of the audit committee and their findings, and of course this was led by Cyril Amarchand Mangaldas as the legal firm, which was, aiding in terms of investigations, and of course PricewaterhouseCoopers in terms of the audit firm, which was also looking into all these matters. Well, they do say that they found no evidence of financial impropriety, or for that matter, no evidence of executive misconduct. They've also said that allegations regarding the treasury policy were also found were unsubstantiated, and this was essentially directed towards the CEO Salil Parekh and Nilanjan Roy, who was the CFO of the company. Of course, back in October, these allegations came to the fore by these whistleblowers, which is why the company did take up allegations. And for now, well, the main part of this entire issue is now, it seems that it is behind us. So the event risk has reduced substantially over this.
Yeah, and maybe that helps in the valuation gap as well. But we'll get to that, Agam. Just firstly, a verdict from you on how did you find the numbers? Investors likely to not be too disappointed here either. So in line with expectations, including the guidance, I'm going to very quickly take you all through the numbers. So we do see a 1% uptick on a quarter-on-quarter basis when it comes to your constant currency terms, as well as in dollar revenue terms. You've seen a 1% rise in rupee revenues. It's up as much as 2%. We've seen a little bit of an expansion in margins as well, but to the tune of around 20 basis points. And the profit number looks a lot higher. That's around 11% sequentially. Why? That's because the base quarter had a one-off due to reclassification of a certain asset, which is why the company did take a one-time loss. If you leave that aside, the big talking point, I suppose, here is the guidance, which was revised upwards to 10 to 10.5% versus 9 to 10% earlier. And again, this was also an expected line because at least 4 broking houses were expecting the higher end of the guidance to be raised. Of course, they raised the lower end as well. So that, of course, is also positive. All in all, it was a very steady quarter, and I've been going through all the broking notes this morning as well as over the weekend, and no one has changed their ratings. We have seen marginal increases in price targets, but a lot of the earnings were in
well, in line with expectations. Perhaps the positive here was the early resolution of the whistleblower allegations.
Agam, I have two questions, both related to earnings. One, the fact that they have spoken, they sound very confident despite the BFSI weakness about the outlook ahead, which probably is also explained in the way the headcount addition has been, right? So one, is that a net positive? And two, this whole conversation around the valuation gap closing in, which had expanded after this whistleblower allegations. People that you've spoken to, maybe have they alluded to this being a key driver as well?
Right. Okay, so I'll come to the first part when it comes to their onboarding. We know that the company has seen so much in terms of total contract wins and total contract value over the previous few quarters. At $1.8 billion, this has been the lowest in the past six odd quarters. So the company has gotten that much momentum in terms of the kind of contract value that we have seen in terms of deals signed, which is why the onboarding taking place is quite natural. The attrition has been lower as well, according to the management, so that of course is a positive. Coming down to the valuation gap, yes, to a certain extent, Infosys already had started, closing in on that valuation gap, especially after the volatile period that we saw in October. But of course, clearly, let's see how things pan out. But for now, it does seem like we may very well see further gains and the further closure of the valuation gap between Infosys and TCS.
Yeah, 20, 25, 28%. And if that closes in, there's a bit of a natural tailwind for Infosys as well. I have just one final question. Anything around Infosys commentary spells either slightly tough news for the rest of the pack? Because BFSI, we note, was weak for Infosys. Now, Infosys has these other triggers, which is the clean sheet on the whistleblower allegations, etc., which might help the stock.
Sure.
Can it be a cloud for some of the others?
Well, but this is something that we've been talking about the past few quarters, that the weakness is there. And I posed this question to Praveen Rao, and he says that there are still a lot of difficulties, not just in BFSI, but in retail as well. And the industry for now is struggling. They just seem to be doing slightly better than the industry for now.
Okay, so, well, maybe not the rest of the IT pack, but Infosys in particular could be in focus today. Thanks, Agam, for putting that into perspective. I dare say two large numbers today, isn't it? One of them is Infosys, which will likely react. The other one is Avenue Supermart, which will likely react to the bottom line numbers as well. So do watch out for both of those in the session today. Key stocks to monitor from a results reaction perspective. A fund with large exposures to mid and small caps fared better than all other portfolio managers in the month of December, and it is betting that broader markets will continue to outperform benchmarks this year. Sajid Mangat has done some data crunching to compare and contrast the portfolios and the returns that they generated. This is for the month of December. The full analysis, Sajid. Good morning.
That's right. Good morning. This is the analysis of the PMS fund managers or portfolio managers, which we normally track on a monthly basis. And if you look at the month,
you're a bit late this time.
There's been
by your own standards.
No, but the thing is that SEBI disclosures have allowed them to has expanded the date of by when they can do it. So by the 10th of the month is when most of the fund managers come back and file with SEBI, and that's the reason things which used to come by the 7th, it's coming at by a few days delayed. But in the month of December, we've seen the average returns for the portfolio managers at around 0.7%. This is still underperforming the benchmark Sensex, which gave a return of 1.13%. What we saw during the month was a return a return coming to some of the fund portfolio managers which have exposure to small and mid-cap companies. We saw that happening through a couple of portfolio managers like Care, which was one of the portfolio managers which did extremely well, 3.98% return in the month of December. But if you look at the quarter and the year 12-month period, they've been lagging behind because it was not the year of small and mid caps last year. So the first 2 months they were down by nearly 8.5%, 9%, and the third month in December they came back with 4%, and as a result of which they ended around 5% lower in the last quarter of the calendar year there. Aside of that, you had Basant Maheshwari, which is there, then Marcellus, Avendus, master portfolio. All these are some of the few portfolio managers who have done relatively well and have given returns more than the Sensex has given. But one thing which came out was that in the care portfolio, you had they had nearly 70% exposure to small and mid cap companies. 30% is to nearly large mid caps or large cap companies which are there, and hardly any exposure to
pure large cap,
except for an HDFC Bank which they have, which is there. And if you look at the portfolio, 25% of that is in papers. So the papers have done well for them in that sense. Then chemicals is another sector where they have a sizable investment, and followed by you have textiles where they have good set of substantially good set of 13-14% portfolio coming there, coming for their top 5 is accounting for nearly 40-45% of the portfolio, and there has been a return which is coming in from the small caps in the last few months, as a result of which we are seeing that happening here. Now we spoke to Amit Joshi, who is the fund manager for CARE, and he is saying that we expect small caps to come in because there is now a fatigue in terms of investment into large caps because of the valuation picture. Difference between the valuation for small caps and large cap has widened to such an extent that even if large caps are being looked at as a defensive at this point in time because of the growth issue, there is a valuation fatigue which is coming in there, and as a result of which fresh money may flow into small caps, and that's what is happening. And that too, not across the board, it will be stock specific where that is zero. They have hardly any debt, good management, good cash flows which is coming in, and good balance sheet and lower leverage which these companies have. And many of their companies are there in that basket of small caps where they have fallen off the cliff after September 2018 because investors were not even willing to look at small cap. The moment you tell them the market cap, they will say that we don't want. And even a volume of 1,000 shares or 10,000 shares will make sure that the stock plunges 10-20%. And as a result, many of them are sitting at less than, at half the prices. And that valuation gap has gone up in the last 12 to 18 months. And they are now expecting the stock specific movements will start coming back to small cap, and that's when you can see 2020 be the year for small caps, or at least select small caps, to come back to the picture.
Well, let's wait and watch if that happens. Maybe the month of January could be even better for CARE portfolio. Let's CARE advisors. But Sanjeev, thanks so much for putting that into perspective. And if you want to know, as most people do, about how the portfolio managers have done in the month of December, do log on to our website, BloombergQuint.com. Try and read more about that. Do log on to our website. Try and read more about Infosys. There's a story out there on the homepage, or if Avenue Supermarts, there's a story on the homepage. As also about Pharma, which will be on our website. But Darshan Johnson to talk about that space, because pharma drug sales grew at a slower pace in the month of December. A select few multinational drug makers, though, grew at a faster pace than their domestic peers, perhaps due to the relatively smaller bases. Darshan Mehta standing by with more on this. Darshan, good morning. How did it shape up?
Yeah, it's decent, but it has moderated in December because November was really good for the pharma companies, the growth that is there. And this is according to data from AIOCD. So that is the data. So from a 14.5% growth, which was extremely stellar, it was a 32-month high, we moved down to 8.8%. So this is how the pharma growth is there. But nevertheless, much better than what we've seen, the degrowth that we've seen. So the trend certainly seems to be moderating in December. Now, if you're looking at the trend, what grew, clearly the big problem here, and this is for December, the volume growth is not happening. That was just 0.7%. Majority of it came in because of price hike. So 5.3% was the price hike. New introduction was 2.7%, and that is why this 8.8% growth came in. So this was for the month of December. Now, if you take the whole year as a whole, the growth was almost 10%, and here also the volume growth was very subdued, just 2% volume growth, and majority of the growth coming in because of the price hike of 5.3%. So basically that's the trend that we're seeing. The other factors that we're looking at is what grew. Basically acute, which is 47% of the market, that grew 9.2%. 11%. Chronic, which is almost 33% of the market, that grew 11%, and subchronic grew 10%, 9% this time around. This is for the month of December. So that is the trend that we're seeing. Now, basically, even if you break it down on what grew, the cardiac segment did well. It was up almost 12%. Anti-diabetic was up almost 12%. So majority of them grew in par with what the market was anticipating. So that's the trend that we've seen as far as the entire market is concerned.
What about individual companies, Darshan? And did domestic drug makers perform better than their foreign peers? I guess not.
Yeah, this time around, yes.
This time
on
they
an
did.
overall, yes, some of them grew well, but on an overall basis, yes, it was the Indian companies that grew well, because MNCs grew at 5.2% in December. Indian companies grew at almost 9.7%. So the trend certainly for December indicated that the domestic companies did well. Individually, if you're looking at the company, the growth for Sun and so this is according to ranks. Sun and Ranbaxy, which is the biggest one, that grew at almost 9%. You had very strong company growth coming in from Zydus this time around, a double-digit growth that came in. Muted growth from Abbott, Cipla. Lupin did well, 8.5%. So that's the trend that we're seeing in the top 5 companies. Among the other ones, you had companies like Alchem. Alchem has been doing extremely well, 13% growth. Mankind has been doing extremely well. Look at the growth in Torrent, 14%. So the lower rung of companies did extremely well in December this time.
Well, that's interesting, considering that I remember a piece that Darshan did some time back, which mentioned about how going ahead, maybe some of the MNC companies could actually do well because of the launches that they bring in. But November was by and large a mixed bag, and some of the domestic companies have actually done better than some of the foreign peers, December rather, have than the foreign peers as well. That's all that we have on First Word today. Lots more lined up on Indian Open. We get in Vikas Khemani of Carnelian Capital Advisors to talk about how is he viewing the equity market situation right now, impact of the MMDR Act amendment on steelmakers with former Steel Secretary P.K. Misra. But after this break, a full tilt towards the day stream.